IFRS 8 operating segments helps us to decide that there are many segments which we would like to report. How to decide that reporting? Which of the operating segments are reportable? So IFRS 8 operating segments helps us to differentiate between the reportable operating segments and other operating segments. So there will be two kinds of categories. One is reportable operating segments and one is all other segments which cannot be reported will be considered as other operating segment. So suppose that if you are presenting our segmentation done on the basis of countries, I may write Germany, France, India, Singapore, whatever revenue and cost of sales I am generating from these countries. I may be having 50 other countries whose revenue may not be. Can I show all the 50 countries together here? I'll see what is important to be shown on the face of the balance sheet. You can club all other as other reportable segments. Previously, the standard known as IAS 14 operating segments used to give guideline on this. We used to identify segments on the basis of primary segment and secondary segments. So segments are no longer categorized in this manner. A segment is considered reportable if the chief operating decision maker reviews the financial statements or takes interest in any segment, it will be reportable. The chief operating decision maker may not be a person, it can be a function, it can be a board wherein there are many people who are reviewing these reports. This approach of identifying reportable segment is known as management approach. And if management is showing interest in these segments, they are of importance. If management has interest in them, that means the stakeholders should also find them important for their economic decisions. So the management approach was introduced under IFRS 8, moving on from IAS 14 to IFRS 8. Under IFRS 8, it says that firstly, we consider those segments as reportable which the management thinks are reportable. Second criteria is we'll use quantitative thresholds. Third criteria is we may aggregate reportable segments if they share similar economic characteristics, have same class of customers, are under the same law governing them, we may club them together. So these are the bases we will be using to consider segment as reportable or not. Just have a look at them. So we'll see the objective scope, what does operating segment mean, and what are reportable segments, the aggregation criteria and the quantitative threshold. What if the segments are not meeting the reportability criteria? They will be considered as other operating segments. How to deal with prior period adjustments? So IFRS 8 requires that an entity should disclose reliable information to enable users of its financial statements to evaluate the nature and financial effects of the types of business activities in which it engages and the economic environments in which it operates. That if I do not disclose the operating segment, suppose you must have heard that Honda suffered a lot because they had a plant in Thailand and Thailand suffered with flood. So they had to stop production of one of their units, one of their cars, because they could not supply the component to the making of that car. So unless being in India, I do not know that they have an operating segment in Thailand, I cannot take economic decisions based on that. Like because of the nuclear reactor explosions in Japan, many of the companies had to shift their offices back to their normal countries, to the countries of origin, and many of the employees suffered. So if I am aware that they have a branch in Japan which may get affected because of news coming in that nuclear reactors are damaging the environment or damaging the area and is hurting the people, hurting the employees there, will have an impact on the business. Future economic benefits which we expected will not flow to the entity as expected. So they serve a good purpose for taking economic decisions based on where they are located, what kind of, under what conditions they are operating. Suppose if I am a company where I have an office in Afghanistan, will the investors feel secure that they will be getting probable returns what they are expecting from a subsidiary in Afghanistan or for that matter any troubled area? So IFRS 8 applies to separate or individual financial statements and to consolidated financial statements if the debt or equity instruments are traded in public market or it has filed or is in the process of filing. Actually, this is the requirement for a company to consolidate their financial statements, that if their debt or equity instruments are traded and if they are in the process of filing, they'll have to consolidate their financial statements. And if they are consolidating, IFRS 8 also applies to them. If an entity is not required to apply IFRS 8 operating segments but they voluntarily disclose segment information, they should not describe it as segment information. The segment information, the presentation of segment information rules of IFRS 8 applies. So operating segment can be anything. Operating segment is a component of an enterprise that engages in business activities from which it may earn revenues and incur expenses, and whose operating results are evaluated regularly by the chief operating decision maker in deciding how to allocate resources and in assessing performance. But if I have a headquarters in Dubai, it may not give me revenue, but it may be helping in generating business, being in the central location of the world. I may be incurring expenses, and the results of the expenses there are being reviewed by the chief operating decision maker. It can be considered as an operating segment. It may not always happen that when we earn revenues only we consider that area as an operating segment. So IFRS 8 also applies to segments yet to earn income, yet to earn revenue, vertically integrated operations, discontinued operations, operations being wound down, or joint ventures subject to some condition. And that condition is that the condition for identifying an operating segment is that its results should be regularly reviewed by the chief operating decision maker. And this approach to identify operating segments is known as management approach. So this is the basis for considering a segment as reportable. So what are reportable segments? Which all segments will be reporting. We can decide them on the basis of aggregation criteria and then quantity threshold. So IFRS 8 requires an entity to report financial and descriptive information about its reportable segment. And reportable segments are operating segment or aggregation of operating segments that meet specified criteria. let's see what is an aggregation criteria. The two or more operating segments may be aggregated into single operating segment if aggregation is consistent with the core principle of IFRS, that they give a true and fair view of the financial statements, and segments have similar economic characteristics and are similar in respect of nature of products and services, nature of production process, type of class of customer, distribution method, the regulatory environment. Like the release of movie Jab Tak Hai Jaan in the subcontinent, Pakistan, Sri Lanka, India, Bangladesh, and then considering it as one segment, and the release of the same movie in Europe, release in France, Germany, UK, considering it as another segment. So we can treat them, we can aggregate all the four countries in the subcontinent into one operating segment because the nature of product and service is the same, nature of production process, type of class of customer or distribution method or regulatory environment may be the same. And if the regulatory environment is not the same, suppose in India at different places, in Rajasthan, Gujarat, it has been distributed, the same movie. So I club the revenues from all these segments into one because they can be considered as one reportable segment, not as different reportable segment. So first is the management approach, what management thinks to be reportable are reportable. Second is the aggregation criteria, that if it meets all these economic characteristics, then only we'll aggregate them, otherwise not. Third thing we'll see at the quantitative threshold. That an entity shall report separately about an operating segment that meets the following criteria. That if any of the quantitative threshold is met, we can consider them as reportable segment. First we'll take a look at the quantitative threshold on the basis of revenue. That reported revenue is 10% or more of combined revenue of all operating segments. Just suppose it generates revenue of 15, 25, 5, what is the requirement? If we are using the quantitative threshold revenue, what is the requirement? The one? The reported revenue should be 10% or more of the combined revenue of all operating segment. If I combine the revenue together, 15 plus 25 plus 70 plus 5 plus 20, 135. 10% of 135 is 13.5. Which of the segments are reportable, which of them are not?
Germany, France, India and UK
are reportable. Singapore is not a reportable segment. And if I say Germany 7, Germany is not a reportable segment because it is not meeting the quantitative threshold, 10% or more of combined revenue of all operating segment. 10% or more, that means even if it is 10, it will be considered a reportable segment. Revenue part is clear? Now read the second quantitative threshold. Okay, before the second, first read the third. Assets are 10% or more of combined assets of all reporting segment. That instead of revenue, I consider them as assets. 10 million, 25 million, 70 million, 5 million. So quantity threshold is 10% or more of combined assets of all operating segments. So if this is the case, it may happen that total assets will be 135 plus 25, which is 165. 10% or more, that is 16.5.
160.
160. So 16 is the quantity threshold. So Germany is not a quantity threshold, is not a reportable segment. France, India, Singapore, UK, and will be considered reportable segments. Now have a look at the third. Please read only after grid off. Read the first line. Just read combined profit of all segments that did not report loss. Combined profit of all operating segments that did not report loss. We'll break it into two parts. Combined profit of all reportable segments, of all operating segments that did not report loss. Suppose the operating segments are A, B, C, E, F, G, H. What will be the combined profit of all operating segments that did not report loss? Which will be the segments that did not report loss? The segments which did not report loss are A,
C, F, and G.
A, C, F, and Z. These are the segments. The combined profit of all these segments which did not report loss is, can I say 500 plus 600 plus 400 plus 800? 2300? What is the second line? Just have a look at the second line. Combined loss of all operating segments that reported loss. Combined loss of all operating segments that reported loss. And those segments are B, D, E, and H. The total of these segments is 2450. Now have a look at profit or loss is 10% or more of greater of. Profit or loss is 10% or more of greater of. Now please tell me which of them are reportable segments. I'll take 10% of what?
$2,300 and also 2,450 for negative numbers.
So what I'll take in this case? 10% of what I'll take? 2,300 or 2,450? Someone says 2,450. Manish and Trilok, do we agree?
Yes.
We'll take the greater of these two terms, will not be emotional that it is negative. We'll take it in absolute terms. In absolute terms, 2,450 is greater of. And in absolute terms, we get 245 as the profit or loss is 10% or more of greater of. So anything above 245 in absolute terms will be considered as a reportable segment. So in this case, all of these are reportable segments. But if I take this as 145, and this as 140, what will be the basis of reportable segment now? If I take this as minus 400,
That's okay. Yeah.
combined profit of all operating segments which is reporting profit, and combined loss of all operating segments which is reporting loss is what will be the criteria in absolute terms? In this case, it will be 10% of 2009, 95. 209.5 will be the quantitative threshold. So, which all are operating segments? Reportable segment?
All except B and D.
All except B and D. B is reporting loss and D is reporting profit, but even then it will not be a reportable segment. So I hope it is clear now. What do I mean that profit or loss is 10% or greater of? Some people are very emotional, they cannot take negative value even if it is higher, but it says that you will have to take it in absolute terms. Profit or loss is 10% or more of greater of. First calculate the combined profit of all operating segments that did not report loss, combined loss of all operating segments that reported loss. Take the higher of these two value and apply 10% to that. Clear with Manish, Lavan and Tilok? They have clearly written, but even then it is an area of confusion. So segments not meeting recognition criteria, what will you do in that case? That first you will apply the management approach, then aggregation criteria, then quantitative threshold. But even then there are segments which are not meeting, and there are large number of segments which are still left, and they are not meeting any of the criteria. So what you will do, you will see that if total external revenue reporting by operating segments is less than 75% of entity's revenue, you'll report additional segments until 75 threshold is reached. Now suppose there are segment A, B, C, D, E. This is 10%. This is 25%. This is 7%, 9%, so which of them are reportable segment? I am assuming that this is external revenue on the basis of external revenue of total. The total representation is this. Which of them will be reportable? Obviously, A will be meeting the quantitative threshold of 10%, B, C, D, E, F will not be meeting. So, of all the operating segments which are reportable, if the total percentage of external revenue is less than 75%, how much is it in this case? Total percentage of the reportable segment? %65. Total percentage of the total external revenue of the reported segment is 65%. That means we'll have to report additional segments to make it or to reach 75% threshold. Which all segments can I report to reach this? Suppose the other operating segment is, in this case, no. Other percentage will be the others are 11. Which segments will you include to make it to give it a 75% threshold? E and F, D and E. Which one? Others will have too many. Other is a category which is a residual category, which other will be any reportable segment which could not be reported will be under the head other reportable segment. We'll have to include D, E or F to reach the quantitative threshold. Then we'll take E, F or D and E.
D and E or E and F or D and F, any combination.
It can be any combination if it satisfies the %75 threshold. It can be D and E, because if I combine D and E, I'll be able to add 16%. If I combine E and F, I'll be able to complete 17%. It will also meet the criteria. If I take D and F, I'll be able to meet 15%. It will also help me to meet this 75% threshold. You can take any of the combinations to reach the threshold. So it says that If total external revenue reported by operating segments is less than 75% of entity's revenue, additional segments to be reported until the 75% threshold is reached. Even if the segments that do not meet the criteria may also be reported, if management believes that such information would be useful to users of financial statement. So is the reason I said that it is the management approach first and then aggregation criteria, then quantity threshold. Now segments not meeting the quantity threshold can be combined with each other to produce a reportable segment only if they share similar economic characteristics. Similar economic characteristics means that these were the measure of economic characteristics: the nature of production services, nature of production process, type of class of customer, distribution method, regulatory environment. Even if these segments, which are D, E and F, which are reporting 7%, 9%, 8%, even if they share similar economic characteristics, measure of similar, not all the 5, but maybe 3 of them, even then, they can be combined with each other to produce a reportable segment if they share similar economic characteristics. Information about other business activities and segments that are not reportable shall be combined and disclosed under the head all other segments category. Clear? First we'll look at the decision tree and it will be very, very clear, then we'll come back. How to decide what is reportable and what is not. We'll identify operating segments based on management reporting system. If management believes they are to be reported, they are to be reported. We'll see, do some operating segments meet all aggregation criteria, that all the 5 characteristics of customer, region, economic region, same class of customers is meeting. We'll club them together and consider them as one operating segment. If yes, aggregate segment if desired. If the management believes them that they should be aggregated, then only they'll be aggregated. If no, we'll see that do some operating segments meet the quantitative threshold of revenue, assets and profit or loss is 10% or more of greater of combined loss of all the operating segments that reported loss, combined profit of all the operating segments that reported profit. If it meets the operating quantitative threshold, yes, it certainly becomes a reportable segment. That if it is meeting the quantitative threshold of 10%, it is a reportable segment. If no, we'll see that do some remaining operating segments meet a majority of the aggregation criteria, then not all the 5, maybe even 3 of them are similar economic characteristics, we can still aggregate them if management desires. So everything is management's decision in case of reporting operating segments. Yes, we'll aggregate them if the management believes them to be aggregated. If no, we'll see that do the identified reportable segments account for 75% of the entity's revenue? Yes, aggregate remaining segments into all other segments category. If no, we'll have to club additional segments, report additional segments if external revenue of all segments is less than 75% of the entity's revenue. Additional segments of D and E to make it reportable to reach the 75% threshold, and they are reportable segments to be disclosed. I hope this is clear now. IFRS 8 operating segments with the help of decision tree, how to decide a reportable segment and how to club others under other operating segments category. What about prior period adjustments? If an operating segment identified as reportable in the immediately preceding period is of continuing significance in current period, what will do? We'll continue to show it as a reportable segment even in the current period, even if it doesn't meet the quantitative threshold criteria for reportability. That if it was a reportable segment previously, we'll continue to show it as a reportable segment. But we'll show it separately, not as part of the segment information. And if an operating segment is identified as reportable segment in this year but was not a reportable segment previously, what we'll do? We'll restate the prior period comparative data to reflect the change. It is a requirement under IFRS that we also need to produce comparative information. And if an entity changes its structure of internal organization in a manner that changes its reportable segments, so prior period information will also be restated for these reportable segments. So these are the prior period adjustments required in case of operating segments. These are disclosures required, and entities will disclose the factors used to identify a reportable segment, the types or products or services from which each segment derives its revenue. It may be blades, it may be razors, it may be toys, it may be cars, from where it is deriving its revenue. These are the specific disclosures: the measure of profit and loss, total assets and liabilities, revenue from external customers, and whether it is meeting 75% threshold or not will be told by this. Revenue from transactions with other operating segments, interest revenue, interest expense, depreciation, amortization, income tax expense, entities, interest in profit and loss of associates and joint ventures, amount of investment in associated joint venture, amount of additions to non-current assets, other than financial instruments, deferred tax assets, post-employment benefits, insurance contracts. We need to disclose all these as part of the reportable segment. And also some reconciliations. Total of reportable segments revenue to entities revenue. Total of reportable segments measure of profit and loss to entities profit and loss. Total of reportable segments assets to entities assets. Because it may happen that we may report 5 reportable segments and other as other operating segments. So of the 5 reportable segments, it may happen that they are constituting 87% of the total assets the company is having. And they may be representing the 95% of all the profit they are generating. So that we need to show the reconciliations. In entity-wide disclosure to be made for an entity as a whole and not individual segments. Revenue from external customers attributed to entities country of domicile and to all foreign countries, it has to be shown separately. Non-current asset located in entities country of domicile and foreign countries, and transactions with a single external customer amounting to 10% or more of the entity's revenue. Now this single external customer may be a country, may be a region, may be a place, may be one person as well. So single customer doesn't mean one person, it may be one company, one region, one place, one country from which the entity is earning more than 10% of entity's revenue. So these are the disclosure requirements under IFRS 8. I hope it is clear to you. And this is all for today's class.